Hello everyone. Let's understand the concept of goods purchased and how to pass journal entries in the books of accounts. Students, firstly, you need to understand the meaning of goods. Goods means material or anything in which the business deals, that is termed as goods. For a manufacturing concern, the raw material purchased for the purpose of conversion into final product is termed as goods. And from the point of view of a trading concern, the ready-made material purchased for the purpose of resale is termed as goods. Now come to the point. Our topic is journal entries for goods purchased. Students, remember one thing: separately goods account is not maintained, but for recording of goods purchased, we open an account by the name purchases account. It means purchase account is maintained for recording the goods purchased for business purposes. Now, before we, coming to the point how to pass the journal entries, there are few instructions and guidelines you need to keep in mind so that no mistake is made while passing journal entries. I am going to write down the instructions. First thing, I would write the transaction. If the name of the supplier is mentioned in the transaction, for example, see, purchased goods from Arun for rupees, suppose 50,000. See, 50,000. Now, if the name of the person is given in the transaction and it is not stated that this is a cash transaction or credit transaction, it will be treated as a credit transaction. Remember this, student. It is a credit transaction. It means we purchased goods on credit. Second type, see, purchased goods from Arun for rupees 40,000 for cash. See, the term cash is given here and the name of the supplier is also given from whom we bought the goods. In this case, it will be treated as a cash transaction and the name of the supplier will be ignored. It is a cash transaction. Remember this, student. Number 3. Mentioned here is the transaction is purchased goods for rupees 30,000. See, and it is name of the supplier is not stated in the transaction, and it is also not clearly mentioned whether it is a credit transaction or a cash transaction. Remember one thing: in the absence of name of the supplier, it will be treated as a cash purchases. It means it is a cash transaction, students. It is a cash transaction. So these are the, you can say, instructions. These are the rules you need to keep in mind before passing the journal entry so that no mistake is taking place or no mistake is allowed and you get full marks in the examination. Now, what will be the journal entries for these transaction? One by one, let's discuss. Purchased goods. Firstly, students, remember one thing: purchases account is maintained for purchase of goods, and purchase account is a nominal account. Which account is this? Purchase account is a nominal account. And what is the rule of the nominal account? Debit all expenses and losses, credit all income and gains. So what is nature of purchase account? Purchase is an expense. Why? Because first we are incurring expenses on goods, and then these will be converted into sales and would result into revenue. So purchase is an expense, therefore it is a nominal account, and that's why it will be debited. So in the first transaction, purchased goods from Arun for rupees 50,000. If a journal entry is required to be passed, the journal entry will be C, purchases account debit, purchases account debit 50,000. Better you should pass this journal entry in the proper format, but this is for understanding purpose only. Purchase is an expense, nominal account, it will be debited, and the name of the supplier, because this is a credit transaction, he will be credited. Why? Because he is a creditor. Credit the giver, personal account. So we will write here purchases account debit to Arun 50,000 rupees. So this is the journal entry for purchased goods from Arun for rupees 50,000. This is a credit transaction. Remember students, this is a credit transaction. Now come to the second one. Purchased goods from Arun for rupees 40,000 for cash. Whenever goods are purchased for cash, in that case students, remember one thing, name of the supplier is completely ignored, because when we are making payment in cash for goods purchased, it doesn't matter who is the supplier, because goods are coming in, that is our expense, and we are making payment by cash. So in this case the journal entry will be, see the journal entry, purchases again being an expense, nominal account, it will be debited, purchases account debit 40,000 to cash account. Name of Arun will be completely ignored. So this is for purchase of goods on credit basis. See the journal entry of the second transaction. Now come to the third one students. See the transaction, purchased goods for rupees 30,000. Name of the supplier is not mentioned. So you need to understand this is a cash transaction. It simply reveals that we purchased goods for cash. Again, this is a cash transaction. This one, so purchases account debit, purchases an expense, so nominal account, purchases account debit 30,000 to cash is going out, that is a real account, credit what goes out to cash account 30,000 rupees. So these are the first three simple transactions which we consider for the purpose of passing journal entries for goods purchased. Now in the next phase, I would like to tell you how to record the expenses on goods purchased. So students, I have taken two transactions in which expenses also incurred at the time of purchase of goods. Let us see how to incorporate these expenses in the journal entries. The first transaction is purchased goods from Arun for rupees 50,000. See this, and rupees 2,000 paid by Arun as carries on our behalf. See, simple thing. This is a credit purchase of goods. We purchased goods from Arun for 50,000 and Arun paid rupees 2,000 as carries on our behalf. It means this carries means the expenses incurred on carrying the goods, on transporting the goods from supplier to our godown. That is the carries, that is our expense. But paid by Arun, it simply means that later on we will pay this amount to Arun. So what will be the journal entries? Please see. Purchases goods for 50,000. Journal entry will be purchases account debit. You need to understand that this in parts students. Purchases account debit 50,000. Expenses are incurred or not, but they do not increase the amount of purchases. Purchases account remains unaffected from expenses incurred. Purchases account debit 50,000. This is a nominal account. This is an expense. On the other hand, the carriage is also our expense. However, we did not make payment for that, but that is our expense because later on we will make this payment to Arun. So carries account debit. Carries is an expense, and this is also a nominal account. Carries account debit rupees 2000 to Arun. Arun's account will be credited for 52,000. See students, you need to understand that. Why 52,000? Because Arun is our creditor for 50,000 for goods purchased and 2,000 for expenses which he is bearing on our behalf, which he is paying on our behalf, and later on we have to pay that expenses also. So Arun our creditor for 50,000, purchase account expenses, carries account expenses, and remember one thing, these both are revenue expenses, and when simultaneously revenue expenses are taking place in the same transaction, then these are maintained separately and these need not to be merged. These are not mixed up, rather these are maintained separately. Now come to the second transaction for better understanding purpose. Here, purchased goods from Arun for rupees 40,000 for cash. Now this is a cash purchases of goods. Arun's account will not be considered and incurred rupees 3,000 as carriage expenses. It simply shows these carriage expenses being paid by us. So what will be the journal entries? See, purchase of goods, you must know purchases account will be debited. Purchases account debited. Why? Because this is an expense and this is a nominal account. So purchase account debit 40,000. Second, carriage is also our expense, nominal account. Carriage account debit. Carriage account debit, this is an expense and nominal account rupees 3,000. And there is an cash outflow 40,000 on account of goods purchased and 3,000 on account of carriage for carrying the goods from the godown of supplier to our godown, and this is our expense being paid in cash. The total cash inflow, it means cash is going out, real account. Credit what goes out, the journal entry will be to cash account and amounting to rupees 43,000. So students, in this lecture I have explained the recording of goods purchased on credit for cash, at the same time the recording of expenses incurred on goods purchased, and I think the concept of goods purchased is completely clear to you. Stay connected, improve your knowledge, subscribe the channel if not yet subscribed, and for videos in Hindi you watch and visit my another channel, that is Commerce with Difference.